Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Managing Director of International Content, Emily Parker. Good morning, you two. Did something happen yesterday? I'm not sure. I swear.
The prices look the same to me.
Yeah, they look the same. Fine. Okay. So checking in on Bitcoin, the CoinDesk Bitcoin price XPX index is currently trading at 41,924. Bitcoin is up 23% over the past 24 hours. And the CoinDesk Ether price, ETX index, right now is at 29.11. ETH is shooting up 30% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. So, Lawrence, about yesterday.
Yeah.
What was that all about?
Listen, we had about $8 billion in liquidations happen in the market yesterday. That's it. So what essentially happened, the longs were wiped out and the market delevered. So when you're seeing these numbers that are like 30% higher than the previous day, remember 24 hours ago at this moment, the price is shot down. So we're using a lower cost basis, so to speak, or a lower basis to calculate the percentage return on our crypto at the moment. In about an hour or two or three, it's going to look a little bit more rational, maybe, 5, 10, 15% from where we are. But we saw $131 billion in trades in Bitcoin alone. That's twice as big as it was in dollar terms as it was on Black Thursday back in March 2020. But it's not the highest on a per Bitcoin basis because Bitcoin back then was priced at about $8,000. Ether, incredible. $93 billion also in trades yesterday. But remember, Bitcoin's up 34% over the previous since the beginning of the year. ETH up 260% still. So it's still on an up. It's still in the green for the year.
Mm-hmm. Incredible volumes yesterday. And Emily, do we have an update on China or any further thoughts a day after they've issued another warning against cryptocurrencies?
Yes, so that was China was one of the main factors that was being thrown around as a possible cause for the great crash of May 19th. So I think what we're seeing now is that this probably will not have a long-term impact on cryptocurrency's price, partly because, as we discussed yesterday, China's warning was largely a reiteration of what they've said in the past, but also because, China has cracked down on cryptocurrency before, and the market tends to rebound because this is inherently a global market.
Right. Well, I mean, a lot of factors have contributed to the sell-off we saw over the past 2 days. Ostensibly, China's negative talk on Bitcoin and cryptocurrencies, as well as Elon Musk's comment and Tesla not accepting Bitcoin. And what was that?
He's going back and forth with Michael Saylor now. Tweeting about Bitcoin's energy use, and it's hard to read too much into what Musk is saying at the moment now, whether or not he's changed his mind. But I think one point that Emily made over the past week is a question, and it's not necessarily, we don't know necessarily the answer, but it's a question of whether or not one person or a few individuals, the influencers, have too much say in the price of crypto, particularly in Bitcoin. And also the question is whether or not that kind of behavior will ultimately maybe not scare away the institutions currently holding Bitcoin, but some of the other institutions that are kind of looking into it or may consider increasing their position. So, we don't quite know yet the influencer impact, but it is something we sort of have to come to terms with.
All right. Well, our next guest is a trader at a UK-based firm. It is with Grant Whitlock we have on the line. Grant, are you there with us?
Yes, I am. Hello, guys.
Hi there, Grant. So if you could, tell us about your interpretation of what happened in the crypto markets yesterday and what we're seeing with this big bounce back today. I mean, the crypto market's back.
Well, I think all three of you are right, really. You have to look at Ethereum performance of 100% returns over a month. It was probably a bit overextended. You've also got the negative sentiment around Elon Musk, and was Tesla going to sell their Bitcoin? He wasn't quick to come out and say that they were going to hold it. And then to add to that, you've also got the closing of all the leverage positions. People getting $8 billion getting wiped out in a very short space of time. So kind of the perfect storm, really. But when you see a price drop of kind of 40% on Ethereum, 38% on Bitcoin at one stage yesterday, it's not really surprising that you're getting these kind of bounces now.
Grant, do we know where some of the selling volume came from? Was it Asia? Was it Europe, North America? And does that tell us anything?
I mean, I think it was all over, to be honest with you. Predominantly Europe and the US because of the time zone, from what we were seeing.
Does that tell us anything about the markets, though, in terms of who was doing the selling, or does it say any? Is there any narrative we can come away with in all of that?
I wouldn't really look for the narrative. Crypto's a 24-hour product. I think it just so happened that it kind of teed up for the US Open, really. But I think that there were leverage positions getting wiped out all over the globe, unfortunately.
What do you think is the outlook for Ether and DeFi? Do you think that DeFi and altcoins are going to be tied to Bitcoin's price going forward, or will they start moving in different directions?
What was really interesting was up until the start of the crash was there had been a bit of a decoupling. Bitcoin dominance was falling. Bitcoin was looking sluggish, and you had quite a few of the top 40, 50 altcoins were outperforming and positive. Even when Bitcoin had got down to like 42,000, but then when it couldn't hold that level and broke, where Bitcoin goes, the rest of the market generally follows. And then you saw the broad-based sell-off. In terms of Ether, I mean, as much as Bitcoin gets the front page news, it's probably Ethereum which most of the ecosystem runs off. So I'm very bullish on that.
Grant, I mentioned before this whole idea of the influencers potentially making some of the institutions skittish when it comes to investing in crypto. Do you think that could possibly happen? Are you seeing any signs of that now?
I mean, I do understand that point of view. It's quite interesting because I do think quite a few people in crypto were a bit fickle. They had Elon Musk as their poster boy when he was buying it for Tesla, and then he's done a bit of a U-turn, and he's probably not on anyone's Christmas card list, the way that people have been talking about him. So for me, Bitcoin and crypto is game-changing technology. It's potentially the internet 3.0. It's bigger than any one person. But yes, I understand when one of the richest people in the world with one of the biggest companies in the world says he's buying it and then says he's worried about the energy consumption.
Grant, do we also have a sense of how much the sell-off was retail versus institutional?
Well, from what we were seeing institutional buyers and some retail sellers. Unfortunately, human nature seems to be that retail wants to buy at the top and sell at the bottom, whereas the institutions are very quick to try and get in some cheap Bitcoin, for want of a better phrase.
All right, Grant. Thanks for your insights. Appreciate your time on the crypto markets.
No problem. Thank you, guys.
All right, that was Grant Whitlock, head of trading at UK-based crypto asset broker GlobalBlock in London. Coming up, more BTC analysis with Voyager crypto exchange in the US.
We are witnessing the greatest paradigm shift in finance in modern history. Join thousands of newsmakers and influencers talking the future of money at Consensus by CoinDesk. A live virtual experience of leaders, changemakers, virtual reality meetups, keynotes from Ray Dalio, Gary Vaynerchuk, and much more. Get an up-close look at the boom in crypto, the surge of institutional investment in Bitcoin, NFT mania, the breakneck innovation in decentralized finance, and the coming disruption from central bank digital currencies. Join us May 24th to May 27th for Consensus by CoinDesk.
Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, May 20th, 2021. I'm Angie Lau. Let's get you up to speed from Asia to the world. In Asia, more crypto chaos today. A lot of red across the board with just a speck of green. Ethereum down a little over 9% at the end of Asia trading hours, at one point down as much as 25%. Bitcoin in the green for a brief moment today, but closing down about 0.5%. Internet Computer ICP up nearly 30%, although not included in some aggregators. It's ranked 9 according to CoinMarketCap data, and now 2 stable coins in the top 10, USDC and USDT. Investors looking for a cover from the market crash. USDT market dominance now up to near 5%. It has nearly doubled in the past week. We spoke with BITFINEX Tether CTO PAOLO ARDOINO for an upcoming episode of Word on the Block today. He said institutional traders on BITFINEX were calmer about Bitcoin than retail investors.
Thing is that if you use less leverage, you have time when the markets move to send more collateral, to add collateral to your position, and you have time to deposit Bitcoin, Ethereum, and Tether to support your position. So that's basically basic ABC risk management.
Yesterday, almost $6 billion worth of Bitcoin long positions were liquidated within 3 hours, starting from around 9 p.m. Hong Kong time. Over $7.5 billion were liquidated across exchanges yesterday, making it the second largest single-day liquidation to date. Asian exchanges Huobi, OKX, and Bybit were responsible for more. Singapore-based Bybit, where over $1.4 billion were liquidated alone, tells us that this number is actually higher.
Our exchange stayed operational throughout the trading activities, but not all other kind of exchanges managed the same. So whatever those numbers are and however eye-popping they are, it's not even a full picture.
The market roller coaster extends beyond crypto as well, though, as the equity markets have also had a wild ride here in Asia. At the end of the trading hours in Hong Kong, Hang Seng down 172 points. Kospi and Shanghai Composite also down on the day. Asian Market Sense founder Andrew Sullivan says the inflation fears in the U.S. could lead to an interest rate hike, and that could make more traditional forms of savings, such as bank deposits, more attractive versus the often volatile crypto markets.
If the bank is going to start offering you 5% in interest rates in a couple of years' time, then people's thinking starts changing about their attitude to the risk that they're taking with their money.
And I want to leave you with this. Even as savers turn to traditional forms of savings like bank deposits, crypto-native companies are going to DeFi. Decentralized finance lending protocol Maple Finance is bringing $17 million in DeFi loans to institutions seeking capital for their growth. Borrowers include leading trading firms and market makers such as Alameda Research and Amber Group based in Hong Kong. Maple Finance's CEO Sidney Powell told Forecast he's seeing tremendous demand for capital from DeFi coming from crypto-native institutions in Asia's financial centers, Hong Kong and Singapore.
You've got those companies who are crypto-native, who are extremely profitable now, who have very, very strong growth runways over the next few years, and yet they're not able to access capital from traditional financial institutions.
Access to capital on a day when so much capital has been wiped off the table. And that's the Daily Forecast. I'm Angie Lau. Until next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Quick live update on Bitcoin. The CoinDesk Bitcoin price XBX index is currently trading at 41,900 and change. Bitcoin is up over 31% over the past 24 hours, and the CoinDesk Ether price ETX index is trading at 29.29. ETH is soaring almost 40% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So the past 2 trading days have recorded the second and third largest trading volumes of the year. Crypto exchanges are struggling to keep up with the demand, reporting widespread widespread outages and connectivity issues across the market. Joining us now to discuss is Stephen Ehrlich, CEO of crypto broker Voyager. Welcome to the show, Stephen.
Oh, thanks for having me.
So Voyager app is temporarily in maintenance mode amid yesterday's panic selling. How are things now?
We were in maintenance mode for about an hour yesterday just to scale up really quickly. The demand was off the charts. We actually saw yesterday, last 24 hours, 6 times more money coming in the platform than leaving the platform. So our deposits, cash deposits coming in, the on-ramp was 6x what the off-ramp was. So, it took us a little time. We made a couple of really quick changes, but we were down for about an hour. Everybody else was down as well. But we actually turned that into a great day for us with new customers, new deposits. We were net buyers on Bitcoin. I heard the previous segment about retail sellers. We were net buyers. Our customers were all net buyers on Bitcoin, Ethereum, Cardano, Doge, Avalanche. Huge up buyers for us yesterday.
In your opinion, what caused this crash? Even if you were able to turn it around, there are a bunch of factors being floated around. One is, Elon Musk's continuous commentary about the crypto world, China. Well, what do you think was the main cause of the price drop?
Well, look, I think there was a combination, a little bit of the fall over from Elon Musk, but he then retweeted or tweeted out about having diamond hands with Tesla. So I think that helped a little bit on the side. But I think it was an overreaction to China. I said that to many of our top customers yesterday who got me on the phone, were asking opinions. I think it was an overreaction. I don't believe anything that comes out of China. There's always an ulterior motive. And I think people overreacted, and now they're realizing that. And yesterday wound up being a great buying opportunity for consumers. So I think that, an overreaction led to the down market. We're coming back, and I expect to see us to continue to grow over the next month or so.
So just going back to the Elon Musk question, it does appear that he does have some influence over price, right? But not just Bitcoin, but also Dogecoin, his tweets, his comments, or at least there's the perception that he is influencing price. How big a problem is this in your opinion? I mean, is this really the sign of a mature market that you have one individual who can impact prices just so frequently?
I think that's changing here, actually. Where his tweets have been so, back and forth that people are putting less credence in credibility into what he's saying. And that's, I think, part of the reasons you've seen some of the Bitcoin dominance drop too. It's at 43% now. And we're seeing more and more of our customers go into other altcoins with really good projects, like Avalanche, like Link, like Cardano, where people are going into those projects while they're getting away a little bit from Bitcoin. And I think that's part of the reason is they're not trusting Elon Musk. No one wants to be subject to him. And you're seeing some really good projects come to fruition.
Do you think what he's doing is market manipulation?
Oh, man. Look, I'm not going to comment on whether or not I think he's doing market manipulation. He has his own reasons for doing what he's doing. But I do think that, people need to understand the market, do their research, be able to trade what they want when they want. And look at other things, outside of Bitcoin.
Steve, we talked about just before that the app was down. What specifically happened other than you had a lot of traffic? What needed to be fixed?
Look, I think we've seen exponential growth in our customer base over the last 4 months. We had 40,000 funded accounts at the end of December. And we're over 500,000 accounts now. And, we're continuing to grow on that as well. And, as you're growing, you're scaling the business. So you stress test your app, you stress test your systems multiple times, but we don't get any downtime like you do in the equity world, right? Friday at 7 o'clock comes, you can stress test your system with nobody on it from 7 till 7 on Monday. We're constantly upgrading our system. And when there's excessive times, we're stress testing and we're putting more, power into the system, and it's a continuation. It's ongoing for us. We expect to be scaled up to have over 10 million users on our platform in the near future. So it's an ongoing thing for us. It's not one particular thing. Systems are not one item. Technology is built on a bunch of microservices, and you're always expanding that.
Steve, Coinbase's revenues are about, over the past 12 months, 4 quarters, it's about nearly 500 times that of Voyager's, but your stock is only 1/27th or so of theirs in terms of valuation. So why, relatively speaking, why should Voyager's valuations be so high? What do you think justifies that? Or is there too much froth in the market in general?
No, I think we're undervalued in my opinion, and I look at it from a couple of key points. One, our average revenue per customer. I think Coinbase said theirs was about $35. Our average revenue per customer is trending at about $100. We have very engaged users. The number of active users that commit and execute a trade in a given month as a percent of our verified users using Coinbase's numbers, we're at something like 30% of our customers actually, of the verified users, actually execute a trade, where Coinbase is about 7%. Growth rates, where we've been growing with the number of customers as a percentage and the revenue that we've been growing on, is we're growing faster on a percentage basis than Coinbase. And no one's seen my numbers yet for the March quarter. Nobody knows what my numbers are really for April and May yet. And I think we will surprise a lot of people as we continue to grow. And therefore, we're undervalued based upon what I see.
Yeah, we'll be on the lookout for those numbers, Stephen. Thanks for joining us this morning.
Thanks for having me.
Right, that was Voyager CEO Stephen Ehrlich. And mark your calendars, in less than a week, Stephen will be speaking at Consensus by CoinDesk. That's happening on May 24th to the 27th. Register now for the biggest global event in the crypto and blockchain industry at events.coindesk.com. Coming up, Bitcoin mining and the environment, plus CoinDesk Global Policy and Regulation Managing Editor Nick Day. To check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. What's the latest out of Congress on the crypto front?
Hey, yeah, so yesterday, two things really happened. First was the House Financial Services Committee hearing on prudential regulators. So basically, they spoke to the heads of the OCC, the FDIC, the Fed, and the NCUA. They spoke to top officials at each of those agencies about various issues, but crypto came up. And during that time, Fed Vice Chair Randall Pearls and OCC Acting Comptroller Michael Hsu noted that, or said that, there's possibly going to be an interagency policy team set up between the three top federal banking regulators that's going to look at crypto and possibly try and get some clarity around what exactly defines crypto in the U.S. So that was the first thing. That's there's no real confirmation or details yet, but if that happens, that'll be a pretty it's an interesting sign for adoption and acceptance from the federal government. The other thing was from Senator Sherrod Brown, a Democrat out of Ohio and the chairman of the Senate Banking Committee, who wrote a letter to Acting Comptroller Hsu and said he should reassess the trust charters issued to Paxos, Protego, and Anchorage, the three crypto companies that now have federal, custodian trusts through the OCC. So that came out last night. We've reached out to all three entities. Paxos had a statement, noting that it's been, compliant with regulations for a couple of years now, but that's probably going to be the next big thing to keep an eye out.
Nick, how much of this criticism by Senator Brown of Brian Brooks and the OCC was because Brooks was a Trump appointee?
That's a good question. I think that is part of it. As you may recall, House Financial Services Committee Chair Maxine Waters wrote a letter to, at the time, President-elect Joe Biden last year, telling him to resend all of the OCC's guidance on crypto, among other things. So this isn't a new thread. It could definitely be just part of that, stemming from the same conversation we've had since December.
Nick, we've mentioned Elon Musk a couple of times on the show already. Do you think that he's starting to get the attention of regulators or people in government who are wondering if what he's doing is actually legal?
So yesterday, the SEC's Investor Protection Division published a tweet saying, "Please don't listen to celebrities about things to invest in." I think he's definitely getting the attention of folks in the SEC. There was a reference to his SNL appearance in the congressional hearing yesterday. I think the question is going to be, what goes next, or what happens next? Where do the regulators go? Because it's hard to, see if he's, manipulating markets that don't necessarily fall within the SEC's jurisdiction. If we're talking about Dogecoin, so I imagine there's a lot of questions around that.
Interesting. Thanks for the update, Nick.
Thank you.
Right, that was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Bitcoin miners make up roughly 0.6% of global energy consumption, according to a University of Cambridge report. While hydroelectric power is popularly used by miners, so are natural gas and coal, the latter of which was enough to spook Tesla CEO Elon Musk into suspending the acceptance of Bitcoin payments. But Bitcoin bulls insist this is an opportunity to make the crypto industry a leader in renewable energy. Joining us now to discuss is Jaime Leverton, CEO of Canadian mining firm Hut 8 in Toronto. Welcome, Jaime.
Thanks so much for having me.
Great to have you. So, Jaime, do you believe questions surrounding the sustainability of the Bitcoin network did trigger the sell-off that we saw in the crypto markets over the past 2 days? And if so, what do you say to investors who are selling because they believe Bitcoin mining is harming the environment?
I think it certainly was a contributing factor. And the response that I give is really not all Bitcoin miners are created equally. And we can't paint the entire industry with the same brush. I also caution on looking at Bitcoin energy consumption in a vacuum without looking at other industries in a similar way.
Jaime, I do want to get to that aspect of of energy consumption in a minute, but I do have to ask you about the global chip shortage. How has that affected your company's outlook and your plans in the next few months?
Yeah, great question. Certainly, supply challenges are a concern across every industry, and ours is no exception. We are one of the very fortunate Bitcoin miners or digital asset miners, as we've also recently announced that we'll start mining Ethereum this spring. We have been in production since early 2018. We've got 109 megawatts that's been actively mining since the beginning of this market. We've got a very diversified fleet that's actively mining, and we're lucky that we had that in place before any supply challenges hit the radar.
Recently, there's been some talk about a shift in mining away from China and more towards North America. Do you see evidence that that's happening, and what is driving that?
Yeah, absolutely. We see a ton of momentum coming into the North American mining space. We see North American mining pools gaining a lot of momentum over the last couple of months. We at Hut 8 moved entirely to North American mining pools about 6 weeks ago, and I think that momentum is absolutely coming into North America in general from a mining perspective.
So we're talking.
What's driving that? Sorry.
I think what's driving it is certainly a lot more interest and acceptance of Bitcoin and digital assets really being here to stay, and wanting a more active participation in that global market in North America. And I think from China's perspective, they can be a little risk on, risk off, as we saw this week, and certainly. We're taking advantage of that by being very focused on the growth in this industry and the innovation that comes with it here in North America.
You're up in the prairies in Canada. What percentage of your energy consumption comes from renewables versus hydrocarbons?
Right. So the province of Alberta is predominantly natural gas and solar and wind. They've made a commitment to significantly increase the portion of renewables that fuel the grid. over the next 5 to 10 years. And so obviously we're active beneficiaries of that program as it continues to roll out. But we, from a Hut 8 perspective directly, actually hired a head of sustainability who's actually looking at our Scope 1, Scope 2, Scope 3 carbon emissions. And we're actually building out a fully and objective auditable program to look at how we use energy and how we offset some of that carbon over time. And then the other thing that I think is really important is ESG has other components that we also focus on at Hut 8. Obviously, the governance aspect is incredibly important to us. We're one of the few miners that has an executive vice president in charge of regulatory. We're also one of the few that has 40% diversity at a board level, and 50% of our senior leadership team is gender diverse as well. So we really look at the full spectrum of how we as an organization are looking at and focusing on that mandate as a whole.
So you guys are a signatory on the Crypto Climate Accord, and one of the big selling points people have been making is that Bitcoin is mostly mined through renewable energy, but a lot of that renewable energy is from the likes of dams, from hydroelectric power, and in some cases like the Three Gorges Dam in China, where a lot of again, China is a big producer of Bitcoin. A lot of those dams are causing ecological problems for the areas, such as earthquakes that we saw over the past few years. So, how much of that is maybe the promotion of Bitcoin as energy efficient or as environmentally friendly, realistic versus, let's say, government propaganda?
Yeah, and again, we can't look at anything in isolation. We really have to look at the macro picture for renewables in general, and again, not painting a broad brush that says all renewables are the right source of energy. If there are downstream negative impacts, we have to consider those as well. I think one of the things that people often don't recognize about Bitcoin miners that are operating in North America in particular is that we actually bring stability to the grid, because we're there as a stable user of a significant amount of power during the 80-90% time when otherwise it would be sitting there waiting for peak demand. And in the case of many of us, we actually shut down operations when peak demand comes along, and give the power back to the grid and the community so that they can take advantage of it when they need it. But we're there as a stable off-taker for the periods of time when they don't.
There is a narrative out there that institutions are, if they do invest in Bitcoin, that they're looking for clean Bitcoin versus dirty Bitcoin. Are you getting a sense of that narrative? And if so, what are those conversations with institutions who are looking for so-called clean Bitcoin?
Yeah, I think that's a difficult conversation to have. Certainly, you can look at companies and assess their commitment to green and their commitment to an ESG program overall. But to put that assessment directly on Bitcoin itself is incredibly complicated. It would be like trying to put an assessment on a piece of fiat currency and value that differently based on the lifespan of where that $20 bill has been, as an example. So I think to do it at a specific coin level is very complicated, but there's a lot of conversation, a lot of value to be had in how you're assessing the participants in the ecosystem overall.
And what is your reaction to Elon Musk's tweet, or Tesla's position on Bitcoin being bad for the environment?
Yeah, I think, again, really difficult to broad brush an entire industry and call Bitcoin out in particular for its energy consumption without applying that same narrative to other industries. Myself, I come from the more traditional technology and data center space, and we don't see the same kind of discord focused on cloud computing or high performance compute for visual effects and rendering, as an example. So it is a challenging place to have a conversation that's not balanced across multiple industries. and really just focus it on Bitcoin. I think it's a healthy conversation to have. I think it's one we should have, but we should apply it broadly to other sectors as well if we're going to have a value debate on energy.
Yeah, Jaime, I wonder, why do you think Bitcoin is singled out in this regard?
Absolutely, because it's so transparent in its energy use. The Bitcoin miners' energy costs are their largest single expense going into the creation of Bitcoin. We all are very transparent in the cost per coin mined. It's one of the key metrics in our space, and therefore that transparency is what's actually made it a target. We can't see the energy consumption of global gold mining. Galaxy did a great report that they published last week suggesting it's exponentially higher in its energy consumption than Bitcoin, but its opaqueness doesn't allow us to assess it as clearly as we're able to do with the Bitcoin industry, unfortunately.
Jaime, interesting perspective. Thanks for joining us this morning, and I appreciate your time.
My pleasure. Anytime, guys.
All right, that was Hut 8 CEO Jaime Leverton. And that's it for First Mover. Thank you, Emily Parker, our CoinDesk Managing Director of International Content, and Lawrence Lewitinn, Managing Editor of Global Capital Markets. I'm your host, Christine Lee. I'll be back live at 3 p.m. with all about Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.